What's going on, traders? Welcome back to Trade Like a Tiger. It's January 27th, 2026, and the Forex jungle is doing that awkward pre-pounce stretch before tomorrow's FOMC rate decision and Powell's must-watch lip-flapping presser. Rates are locked in at the 3.5 to 3.75% level, like a tiger in a too small cage. But one dovish whisper on cuts or a hawkish snarl about inflation could turn the U.S. dollar from sleepy kitten to raging beast, or back to a chew toy. Tomorrow's the fireworks show, so keep those claws ready. The Japanese yen is still showing off its ninja moves after yesterday's intervention scare, with the US dollar JPY currency pair bouncing around the 154.3 to 154.5 levels today after flirting with the 153 lows. Those joint US-Japan intervention whispers, shout out to the New York Fed's cheeky rate check and Prime Minister Takaichi's don't get too frisky warnings, have carried trade shorts sweating bullets. Japan's fiscal spending bonanza is trying to put a lid on the rally, but if specs push it again, expect a surprise claw swipe that sends this pair tumbling faster than a tiger on a slip and slide. Yen intervention? Yen terrific for bears. Gold is basically the diva of the day, still strutting above the $5,000 level and teasing the $5,110 level after smashing records, trading for firm around the $5,080 to $5,111 level on pure safe haven sparkle. Geopolitical headaches, trade drama, and that fiat who vibe have investors piling in like it's the only thing shinier than my coffee-filled trading screen. When gold roars this loud, the dollar usually ends up hiding under the couch. My top setups from deep fundamental and sentiment analysis are a mixed bag of claws out, bulls roaring on some, bears mauling others. On the very bullish side, I've got New Zealand Swiss, New Zealand Yen, and New Zealand CAD pairs that are leading the pride with high scores, fueled by strong growth, consumer strength, and jobs edges. Kiwi crosses are purring like they've got extra lives. Aussie dollar Swiss franc, as well as the New Zealand dollar, US dollar pairs, are also very bullish, riding commodity vibes and risk appetite. Flip the script to bears, and the weakest are getting shredded. Euro Aussie dollar at a savage -8 score at the moment. PMI mismatches, as well as growth cracks, equals oof. Euro New Zealand at a -7. Pound New Zealand and the dollar yen at -6. Intervention fears plus macro pain. And then there's the Aussie New Zealand dollar, the broad US dollar index, and British pound Aussie dollars clustered around -5 levels like a grumpy bear convention. So I'll be stalking strong daily and 4-hour supply and demand zones on all these standout bullish beasts, as well as the ultra weak bearish ones for high probability trades. Because when fundamentals and sentiment align, those zones are where the real pounce or dump happens. Today's calendar is a total yawn fest compared to tomorrow. Today was U.S. consumer confidence, the Richmond Fed manufacturing, some home price stuff, as well as some other minor fluff. No high impact bombs to spike the volatility. So it's pure pre-FOMC positioning. Euro and pound holding steady with slight edges versus the dollar. Swiss franc flexing safe haven style. Commodity kitties, Aussie and New Zealand dollar, mixed but kicking. And the bottom line is calm per today, potential roar tomorrow. Watch yen drama, gold's glow up, and those top bullish Kiwi crosses, plus mega bearish setups on the Euro Aussie, the Euro New Zealand, and the dollar yen pair, and crew, of course. Hunt those supply and demand zones like a pro, risk small, Fed surprises turn accounts into catnip confetti, and keep the laughs coming. Trading's way less boring with puns. That's your quick wrap from Trade Like a Tiger. So trade smart, trade fierce, laugh loud, and I'll catch you tomorrow for the Fed chaos. Roll on.